the right stock at the right time.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines this morning. Asian stocks extend their drop and are set to post their worst weekly performance since March. The Securities and Exchange Board of India has made changes in its regulations and for IPOs and share buybacks in order to reduce redundancies in the process. Oil prices have surged today following an overnight drop as the OPEC meet begins in Vienna. And U.S. Commerce Secretary Wilbur Ross brushes aside concerns raised by Fed Chief Jerome Powell and others and says that U.S. has more bullets than China when it comes to a trade war. And finally, in the Football World Cup, Argentina's prospects take a further beating after a 3-0 defeat at the hands of Croatia. I need to watch the highlights of that game. I don't know what's happening. First Germany and then Argentina. All right, with that, let's take a check on the U.S. markets. U.S. stocks were under pressure with the Dow Jones Industrial Average extending its 8th straight loss in a row as fears of an impending trade war between the U.S. and China dragged investor sentiment. Abigail Doolittle of Bloomberg News wraps up all of the action on Wall Street in this report.
Stocks finished lower in Thursday's Wall Street session. The Dow finishing down for an 8th day in a row, matching a losing streak made back in March of 2017. This after the Dow did fall about 0.8%. The tech-heavy Nasdaq fell more, 0.9%. The S&P 500 fared the best of the three major averages, falling about 0.6%. Now, the majors did open higher. It seems that renewed fears around trade tensions, plus a Supreme Court ruling that allows states to collect taxes on online purchases, may have set a bit of a bearish tone. Now, on that Supreme Court ruling, Amazon did fall 1.1%. Other e-commerce companies that could be affected by that ruling also fell, including eBay and Overstock.com. Overstock.com down more than 6%. Some analysts are saying Amazon is positioned to be affected the least by this, since they have been preparing for this possibility. Energy stocks were also weak. In fact, this was the worst sector for the S&P 500, down about 1.9%. Lots of different names falling there, including Devon Energy down sharply, Valero also down, and this as Brent crude fell more than 2%, WTI crude about flat, all of it this ahead of a crucial OPEC meeting. And then finally, Intel down more than 2%, down 2.4% after the company's CEO did step down for violating the company's fraternization policy. So overall, with stocks lower and haven bonds higher, Thursday's Wall Street session did have a risk-off tone. In New York, Abigail Doolittle, Bloomberg News.
Now, there's lots going on with regard to the trade negotiations and tariffs and retaliatory tariffs and all of that. India, by the way, has imposed retaliatory tariffs on the U.S. and China has reiterated its stance that if Donald Trump goes ahead with his recent threat of imposing higher tariffs, then China will respond accordingly. Now, in all of this, U.S. Commerce Secretary Wilbur Ross has defended Donald Trump's recent moves on tariffs, and he has also said that in the trade spat with China, tariffs aren't the only way to retaliate. Here are some of his comments.
Nor are they the only way that we can retaliate. The truth is that China, Europe, a lot of other big countries have been using non-tariff trade barriers for a long, long time. They put on weird standards that it's impossible for American products to meet. They put in all sorts of elaborate and non-science-based restrictions. For example, some of these countries keep complaining, oh, we can't import U.S. beef because of mad cow disease. Well, do you think mad cow disease is really rampant in the U.S.? I haven't heard a report of it in years. Similarly, some countries say, well, we can't import your chickens because of Asian flu. When's the last time you heard a case of Asian flu in the United States? It's all nonsense. The truth is that they've been very protectionist. we have been very close to free market, and now that we're trying to defend ourselves against their bad practices, they're screaming and yelling. Well, they've been spoiled for many, many years, and that game is over.
All right, seemingly it's just a few ticks of trade so far in the Chinese markets and also in Hong Kong, but seemingly a sea of red as of now. The only green tick, and just barely, is the Australian benchmark, which is just about flat, up about 2 points in fact in early trade. The Nikkei was lower by close to 1% in early trade. It's more or less there. It's down 0.9% at the moment. You have the Chinese benchmarks that have opened with sharp cuts, but you'll have to see how the dust settles in that market. Of course, those markets have just about opened up. The Hang Seng as well losing close to 0.75% in the first few ticks, but we'll come back to where the markets settle, those Asian markets. In the meanwhile, let's go to Agam Vakil here for the trade setup for the day in India and also what's happening in the futures and options space. Agam, what's on your list today, and also do you have anything to say about Argentina's loss?
It's been quite a shock, Alex, to say the least. And well, as many would say, the stock of Argentina has bottomed out. It can only go up higher. So well, it'll take some courage to go long on the stock of Argentina, but let's wait and watch. For now, they are in trouble.
Good one.
But when it comes to the Nifty and the SDX Nifty, let's take a look at that. We're looking at declines around 0.3% at around 10,700. Where have we seen our markets end yesterday? Well, the Nifty, of course, ended up lower by as much as 0.3%. Nifty, mid-cap and the small-cap indices taking deeper cuts, as has been the case over the previous few sessions as well. And when it comes to Nifty Bank, again, a cut of around 0.2% coming through. Let's take a look at the Nifty IT, Pharma and PSU indices. That's where we've seen some underperformance coming. And the Nifty PSU Bank, again, starting to wilt under pressure after we've seen 2 straight days of losses come through. And moving on, let's take a look at some of these month-to-date performances. And as you can see, these numbers have now reduced. So it's just 12% for the pharma index and about 4% for energy. IT, more or less, well, largely flattish on a month-to-date basis. And on the losing end, well, the losses have become a little more pronounced for infra and the realty indices. Well, moving on, let's take a look at the VIX, and as one might expect, it has moved up to a certain extent at around 12.45. What do we have in terms of the ADR picture? Again, some weakness coming through for the likes of Dr. Reddy's and Vedanta, not too much to speak for when it comes to Tata Motors. And well, marginal gains for ICICI Bank, Infosys, Wipro, and of course HDFC Bank remains largely flattish. Surprisingly, you know, FIIs have gone in and bought nearly 1,130 odd crores, and this is well, this may be just an exception, but we're just going to have to wait and watch whether or not this is a change in trend. DIIs have bought around 664 crores. That brings the FII buy number, brings the month-to-date number down as well, month-to-date sell number down to around 6,100 crores, and of course DIIs now moving up, taking that number up to well over the mark of 10,000 crores. Now, in terms of, again, contribution, it's the same stocks for, you know, over the last 3 days. It's been Reliance, which has been keeping and lending strength to the markets. ICICI Bank and HDFC right there, and some weakness coming through for ITC, L&T, and M&M. Watch out for some of these stocks, and we'll just have to wait and watch whether or not there is a continuation of a trend here. ITC specifically stands out because there are a lot of pair trades playing out where a lot of traders and investors, for that matter, are going long on HUL and short on ITC. Let's move on and take a look at the futures and options space. We did see weakness in the index, but very little change in open interest. The Nifty Bank, on the other hand, has seen another 8% decline in OI. This is indicating longs and winding. How have we seen changes in open interest across various option strikes? And as usual, it has been the 10,800 mark, where we have seen more writing in the 10,800 call and a little more unwinding in the 10,800 put. Now, again, there really isn't too much change when it comes to the maximum open interest distribution across all series, still remaining with 10,700 put and in the 11,000 call. Let's move on, take a look at the Nifty put call ratio, which hasn't changed either, still at around 1.48 to be precise, and not too much move there either. And that said, in terms of stocks, we have the One Housing Finance, JP Associates, and Infibeam. and we're also keeping an eye on CG Power, which has moved into the ban. Watch out for this one because there were some brokerage upgrades yesterday, and Jet Airways moves out of the ban, so we can expect a normal trade to resume for Jet Airways as well. Few other stocks that we are watching out for. Indian Oil Co-op, that's seen some short covering coming through among other stocks. So we're also watching out for SRF, which has seen some intensifying selling pressure come through even as the underlying declines by 2%, another 19% added in open interest. And finally, NIT Technologies. This is the one which has seen a sharp up move, but we're starting to see some longs unwind as a caution sets into the market. So these are some of the stocks that we're watching out for, of course, and the benchmark indices as we move into trade today.
All right, thanks so much for that, Agam. Let's move on now and take a quick check on the rupee in the bond market. Yields on the 10-year government bonds fell for the 5th consecutive session yesterday after the minutes of the June meeting of the Monetary Policy Committee gave no indication of future rate action. Meanwhile, the rupee paired losses and rose past the 68 mark against the US dollar. So far this year, the rupee has weakened 6.2%. Just a few updates in the international market for currencies. Last night in the US session, you had treasuries, safe haven treasuries gain or strengthen, and you also had the dollar weaken. In England, what happened was that the chief economist of the Bank of England has gone against the tide and voted in favor of an interest rate hike, and you saw that the pound reacted sharply against the US dollar in yesterday's session. It spiked in that session. But let's move on now and talk about the big event of the week. It so happens it's happening today. Oil ministers across the globe have been laying the groundwork all week for today's biannual meeting in Vienna, where the OPEC is expected to ease supply constraints that have been in place since January 2017. Here's what Saudi Arabia's Energy Minister Khalid Al-Falih said.
The consensus, overwhelming majority, is to recommend a million barrel easing of the cuts that are in place today, which is 2.8. That is a nominal figure, meaning once it's distributed, what actually is delivered to the market is going to be a smaller number.
Well, that's a very short comment coming in from Saudi Arabia's oil minister. But for more details on what exactly could go down in this meeting, Will Kennedy, who is the managing editor for energy and commodities at Bloomberg News, explains everything that could happen.
The mood can change. So clearly the Saudis have come and they've got a plan that they definitely need to raise production. They're very concerned about the view of consumers, the views of Donald Trump, who's an important ally of theirs, the views of India, their biggest customers in India and China, and they're trying to persuade people that they need more oil in the market. What's important, of course, is that although there are 24 countries involved in this deal, only a few of them can raise production: Saudi Arabia, Russia, the other Gulf producers. So in a sense, they hold all the cards because they're the ones who can act. They've just got to try and use this diplomacy to bring the rest of the group with them.
Is it possible to strike something in the middle where Iran is willing to get on board, but Saudi's able to go back to Washington and say, look, we boosted production, prices are coming down a bit, are you happy enough here?
OPEC, like so many international organizations, excels at fudge. So what you might see after tomorrow is an agreement which is a little hard to follow, which has some very difficult numbers, which will allow Iran to say that the existing quotas remain in place, but also allow Saudi Arabia to say we can supply more oil into the market to compensate for some countries which are over-complying. So you're starting to see emerge the outlines of a possible compromise that allows everyone to be happy and to keep a lid on oil prices.
All right. Crude oil, of course, is going to be front and center today, and we'll stick with updates from that meeting in Vienna. But for now, let's go to Jayesh Khilnani with all the updates in the commodities space. Sharp moves there in crude overnight and today, Jayesh.
That's right, Alex. In fact, it looks like the market is expecting some positive news to come out from the Vienna meeting because the prices have spiked 1% this morning after a sluggish day yesterday. Now, this is on the back of Saudi Arabia proposing, on one hand, that the output be increased by about 600,000 barrels per day, while on the other hand, Iran has rejected any output increase in the oil production. So two contradictory views coming in from two different countries. commodities. As far as brokerages are concerned, JP Morgan believes that the OPEC could actually likely increase the production by at least 5,000 barrels per day. So that's as far as the oil markets are concerned. Now, if you look at the base metal space, the index itself closed lower for the 6th straight day, and zinc posted its longest losing streak in a year now. It ended more than 2.5% lower. Lead also, which declined more than 1%, was down 3rd day in a row, while on the other hand we had aluminium. It snapped its 2-day fall, and copper also snapped, closed positive, as traders have now turned bullish as the trade war concerns seem to be priced in. Now, as far as gold prices are concerned, gold actually dropped for a 3rd consecutive day. But the key trigger for today would definitely be the oil markets and what comes out of the Vienna meet.
All right. Thanks so much for that, Jesh. Now, the SEBI board meeting took place yesterday, and the market regulator is moving towards an easier listing regime. The SEBI board has eased certain criteria laid out for companies planning to come out with an IPO or a rights issue. Sajid Mangat has all the key takeaways, because there were many in this report.
The market regulator has come out with certain changes to 3 big regulations, which is the buyback regulation, the SAST, which is the substantial acquisition of shares and takeover regulation, and the ICDR regulation. If you look at the key takeaways from these redrafting of these 3 key regulations, is that for buyback, that they have defined the buyback period as a period between declaration of the buyback and the date of payment. As far as IPOs are concerned, which comes in the ICDR and all, it talks about time period for IPO. Price announcement has been reduced from 5 days prior to start of an IPO to 2 days prior to start of an IPO. There have been changes made with respect to the market infrastructure institutions, where the regulators allowed multilateral agencies to come and acquire up to 15% if they are recognized by the government of India. Over and above that, they are also looking at governance changes, which is there with respect to tenure of MDs and CEOs of stock exchanges, and the public interest director which are there on the stock exchanges and depositories. As far as MDs and CEOs are concerned, they will have 2 tenures of 5 years each, subject to 65 years of cap, whichever is earlier. As far as public interest directors are concerned, they will have 3 tenures of 3 years each, subject to cap of 75 years, whichever is earlier. So there is quite a few governance changes which has come through in this SEBI board meeting.
All right, and separately, SEBI Chairman Ajay Tyagi also spoke about 2 ongoing investigations into the NSE co-location case, and also the issues with regard to ICICI Bank. Sajid Mangat has all the highlights there too.
The big questions which were at the press meet was primarily with respect to National Stock Exchange probe, which is an ongoing one. What the chairman of SEBI has categorically stated that probe or investigation is complete. They have got the investigation report. The forensic reports have been received, and the SEBI would be initiating enforcement of these in the next few days. So enforcement activities will come in against institutions and individuals in the next few days. That's what SEBI chairman has to say, which basically means that you will see some kind of SEBI orders coming in the next 5 to 10 days, and post that these individuals or institutions can go back to SEBI and take this entire case forward. Remember, NSE and its officials had gone for a consent application. That application was returned by SEBI saying that let the investigation get completed and then they can reapply for consent. So now it would be up to NSE to again apply for consent as and when the orders come out. The other big one was the ICICI Bank, which has been going on. SEBI has been asking questions to the bank with respect to the entire ongoing investigation in the Chanda Kochar and the links to Videocon as far as lending is concerned. SEBI has very categorically stated that they haven't received any response from ICICI Bank yet, and they are looking at the matter.
All right, now moving on from that story, the Reserve Bank of India has held its ground and refused to give any special relief to the power sector from its February circular that mandates early detection and time-bound resolution of stressed assets. Bloomberg Quint's Bhanvi Arora has all the details on that story.
RBI has maintained its stance for resolution of stressed power assets as per the RBI's current guidelines. The Feb 12 circular does not stop resolution of stressed power assets. Even if there is a default, resolution is possible within the given time frame. This was the stance of RBI in meeting. The meeting was chaired by Financial Services Secretary Rajiv Kumar, Finance Ministry officials, RBI officials, Power Ministry officials and the representatives of power sector were also present in this meeting. Now, there was a suggestion by state-run Rural Electrification Corporation to form an asset management company under the Parivartan scheme. Rural Electrification Corporation has identified projects with a total debt of rupees 1.8 lakh crore, which will be housed under the asset management company that will be jointly supported by financial associations. There was also a suggestion by Independent Power Producers Association to form a task force to look into the issues plaguing the sector.
All right, and Shraddha Babla is joining us now with the stocks in news. Shraddha, morning. What are the stocks on your list today?
Good morning, Alex. I'm going to start off with HCL Technologies, a big deal win for the company, outsourcing deal from Nokia. This is a 5-year deal, of course, and according to ET, the deal is expected to be worth upwards of $500 million, so that's a stock to watch. The other part, you also have AstraZeneca Pharma. They've received an import and marketing permission from the DGCI, that is Drug Controller of India, for their version of Imfinzi trademark. I don't know how to pronounce it. I hope I've got it right. But marketing approval coming in for a drug that's an anti-cancer drug in India. Stride Sarshun's rectal artesunate product has received WHO pre-qualification. Again, that's an anti-malarial drug. So a positive development. KPIT Tech and Kinetic have announced a strategic life sciences collaboration. You have some distilleries whose arm has received approval for manufacturing of Indian-made foreign liquor. The company has said that they will reduce commercial production of that liquor from their Karnataka facility within the next 1 month. Havells India has said that they will acquire the remaining 31% stake in Promtech by exercising the call option that was agreed upon based on a April 2015 agreement. So watch out for that name. Promtech is a Bangalore-based entity which is engaged in marketing and manufacturing of LED products. And finally, you have Balaji Telefilms. They're going to be meeting a couple of investors, including Franklin Templeton Mutual Fund, Sundaram Mutual Fund, and some of the others on 22nd of June. That is today. So that's another stock to track.
All right, thanks so much for that, Shraddha. Now, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. There are also several stories on the website, bloombergquint.com. At the moment, we've discussed quite a few of them, but here are some others. As India looks to prepare for an electric vehicle boom, a joint venture of 3 state-run companies to hunt for minerals like lithium and cobalt overseas will become operational this financial year. The ouster of Intel Corp Chief Executive Officer Brian Krzanich, okay, I don't know if I'm pronouncing that right, for an inappropriate workplace relationship leaves the world's second largest chip maker with the worst leadership crisis in its 50-year history. All right, so the World Cup is ongoing and India is far from being called a football crazy nation. Having said that, it is called a cricket crazy nation. So what's the viewership here? How many people in India are actually watching football? Here's a look at and a comparison between the two.
Once every 4 years, the inescapable grip of football fever reaches its peak. It's a recurring phenomenon, one that closely resembles what cricket fans experience across the globe. But how do two of the world's most closely watched sports stack up against each other? Let's start with money. Australia's 2015 World Cup win left the team with a sweet $3.97 million. Compared to 2014 FIFA World Cup champions Germany, that basically amounts to pocket change. That sizable difference extends to the two governing bodies that organize those games as well. In 2015, the ICC Cricket World Cup generated $42.8 million in revenue, a fraction of the $4,826 million that landed up in the coffers of FIFA in 2014. Expenses, however, are a different story. When it comes to the last Cricket World Cup, the ICC got more bang for its buck. But why the huge difference? For one, the FIFA World Cup has been around for much longer, with 9 more editions compared to cricket. There's also the 32 participating countries compared to 10 in each Cricket World Cup. That means more fans travelling abroad to fill up those empty stadium seats. But here's the silver lining for cricket fans. Even though football has a much larger fan following, cricket commands nearly half the television audience. And unlike football, buying tickets to support your favorite cricket team is a lot easier on the pocket.
Well, I don't know about anybody else, but I'm going to be watching football this weekend. Here's hoping that you have a good weekend as well. Thanks so much for watching. This is Bloomberg Quick.